Hi there, welcome back to Dukascopy TV. I'm Ben Jones. Mexico has had its ups and downs in terms of economic indicators recently. So joining me on the line is Rodrigo Aguilera from the Economist Intelligence Unit to discuss the current state of the economy and the appeal to foreign investors. So Rodrigo, towards the start of the year, there was a string of negative data for Mexico, but recently we've seen some positives, such as industrial production, which saw the peso shoot to 5-month highs. Later on today, we have retail sales, which have been quite weak recently. Do you think they'll continue to be weak?
Well, I think we have to understand why the reasons for this weakness during the first quarter overall. On the domestic side, it's been the fiscal reform. I mean, no doubt about it. There was a bunch of new taxes that were introduced from January 1st, and there were other taxes that were raised. So in many ways, this created a bit of uncertainty among consumers and among businesses as well, which is why consumer confidence pretty much crashed during January. Then it recovered a bit, but it's still weak. It's still lower than last year's levels, which were already a bit depressed. So I don't really think that's going to change anytime soon. And this is obviously going to have effect on certain indicators, such as retail sales, which we expect them to expand, but not at ideal levels. So at least for the first half of the year, it's going to be a bit depressed. Another reason that I would add is that U.S. performance during the first quarter was a bit disappointing, mostly because of bad weather conditions. I mean, at the AU, we do think that the economic fundamentals are broadly positive in the U.S. I mean, we're seeing unemployment go down. We think there should be a bit of a stronger pickup later in the year. But that has affected at least those industries and those sectors in Mexico that are export-oriented.
Throughout the rest of the week, the unemployment rate will be released and the GDP growth rate. The Bank of Mexico continue to lower their growth forecast for Mexico. It now stands at 3%. What are you expecting from these two releases?
Well, I definitely think that after the first quarter GDP release, they're going to have to bring down their forecast. I mean, they've been a bit unrealistic for quite some time. At least the Bank of Mexico has been slightly more ahead of the curve than Hacienda, who still has a bit of a highly optimistic assessment of the economy this year. I mean, at the AU, we've had a 3% forecast for this year now for a couple of months, so we've been a bit ahead of the curve in that sense. Analyst consensus right now is also ranging around 3%. But I think if the first quarter figure disappoints, then that's going to go down. And we might end up lowering it anything between 2.5 to 3. Employment is obviously linked to this to a certain extent. At the beginning of the year, the figures were looking quite good. Then we had March, and it deteriorated quite substantially. I don't really think the unemployment rate in Mexico really gives a consistent picture of how the economy is doing. I mean, last year, it performed relatively well, considering that the economy wasn't doing so well. You have month-on-month changes that really don't say much. I mean, first of all, there's an issue of how unemployment in Mexico is measured, which is it's a very I would say broad measure of employment per se. So it tends to underrepresent the scale of unemployment. So actually the underemployment rate is a bit better in that sense. So I can't really give an estimate on whether next month's rate is going to be positive or negative, but I would focus mostly on the GDP number. That's going to be a key one.
And finally, would you say that investor confidence in Mexico is increasing? Obviously, towards the start of the year, we had a pullback from emerging markets, but is Mexico back on track to being an appealing place for foreign investment?
Sure, I don't think the emerging markets pullback really had a particularly damaging effect on Mexico. If you compare this sell-off versus last year's sell-off, investors were a bit more discriminating this time around, and that's a positive thing. They focused on those countries that have structural weaknesses, say potential balance of payments difficulties. Look at countries like Brazil relative to Mexico that has a higher current account deficit, has stronger links to China, which is clearly slowing down. So those countries have been more on the crosshairs. In that sense, I mean, the reform agenda last year was very positive in the sense that it has brought a lot more interest in Mexico, and it has made people focus on the country, on the economic side rather than on the security side, which was what most people associated Mexico with, insecurity, drug violence. So it's good to know that investors are actually looking at Mexico and thinking, hey, this is a potentially lucrative market that's going to see some key sectors open up, either because they've been legally blocked from competition, like the energy sector, or because they have been structurally constrained by a duopoly or a monopoly or whatever you want to call it.
Rodrigo, thank you for talking to us today. That's all we've got time for now. Keep clicking back throughout the rest of the week, though, as we have plenty more updates and exclusive interviews for you. Goodbye.